Hello and welcome to this quick description of cycles, how they interact with each other, and for that representation we have two screens here. On the right side is the entire market cycles and rotations. On the left side, we just added SPX that drives the entire market. On the bottom, where my cursor is at this point, this is the multi-time frame cycles of the entire market. This is the compression cycles of the entire market, the second indicator in the middle. On the left side, the bottom is again the compression cycles for SPX, and this is another multi-time frame cycle for SPX. So when you see that market is going 3 days up, 2 days down, 3 days up, you need to first start with the direction from the entire market. Now there are so many ways of doing things, so this is one description of it, right? So we are setting up the anticipation of the bias. So we can call the bottom area as the bias picker for the next day or two, how market is going to cycle up or down. So this is like bias qualification filters. And let me draw some lines on it. So the idea is when all these things are spreading across, they are spread all over and then it is tipping over, right? We know that most likely that there is going to be some downward pressure from the market from thousands and thousands of stocks, and we are going to see the impact in SPX also, right? That's what it is. So at this point, when things are flattening out, we are looking at, okay, there's going to be some downward pressure coming up. It can happen overnight, which you will see that jump down, and here everything is tipping down. We are expecting the market should rally again from here all the way a few days, right? And then it should tip down. You see the same behavior here, so let me mark it, right? Now since I have this sorted out, what I wanted to do for me, I understand what it means and how to use it. And once this lines you see here becomes real fat right here, which basically means that pressure has been built up towards your bias. So this is how market is going to rotate for a day, a few days, right? And then it's a matter of tactical trading beyond that. So my cycles are spreading all over, excitement is over, and the cycles are going to tip over on the other direction, right? It'll keep on cycling like this. And actually this is a great way to have a bias. As I said, it is not a business where you go and show up for work every day, especially when you are not making any decent money in the market to start with. You're better off slowing down. Slower the better. If you treat it like every day you have to go and get up to make money as a job, 9-to-5 job, this is not the way market works. You can make it happen once you gain the proficiency of understanding what's really going on, right? So I'm marking these levels for a reason. Okay, so that is how the market is telling me what should happen. You also see that here, right in the middle, we have white lines. I just marked one. These are the balance points. Again, giving us some extra bias. Further away you move away from the line, most likely you will snap back. All right, so that is how you need to come with the understanding of the entire market space. You can create your list of top 150 stocks, 2,000 stocks, 5,000 stocks, 20,000 stocks, various industries, various groups, and create a composite index out of it. And then you can just play with this cycles, right? I'm just showing you one index, one group of stocks. All right, so now let's do something called tracking. So right now, I think we were in a long bias. We took some long at this point before on Friday, and we closed it out here. And we took long again, and we closed it here. Right? Why you are in the middle of it, and the cycles have to recycle all. It can be happening in 1 day. It could happen in 2 days, right? So 2 to 3 days, you should see some cycle tipping over, so giving you the right direction bias. So on December 30th, we went long, bunch of contracts, and we closed it right here. Now this was the reason for doing the bias trading, and options were there involved in this process, right? So now, when, as I said, market is going up, it is spreading. First of all, it is spreading widely, and then it is consolidating. The cycles are converging. We know that when the white line is here, it's going to snap back, right? This is what it is detecting. How about the middle one? The middle one is doing the same thing, but it is doing just based on pure price. It doesn't use anything else. It is not doing anything else. It's saying all the multiple time frames have compressed together or not. And then it is pinning. So this, you see this, I have this yellow box lines here, right? These are the day pins. So the day starts, this line is not going to change until the next day. Once it is established, it will not change until the next day. When I'm saying day, market open, market close, right? So what we do is, when we are sitting here, at this point before the close, everything converged very clearly. We know market is gonna blast off next day to the upside. We know that. So overnight trades can be placed here using options and things like that. On the left side, you see right here perfectly, it happened exactly the same thing. SPX blasted off next day in the morning, and now at overnight you may have gone down, this and that. That's why this strategy is for people who are starting new and who are not profitable. You want to have 10 trades a month, and you want to be at 90+% profit ratio. This is a great starting point, right? You can be coached on this, you can experience it, and you can have this system as well if desired. So there we go. So if you had SPY options, since this is SPX, you made good money. $10 overnight jump. It's a huge profit, right? Perfect. And now nothing goes up forever, right? So we have this scenarios coming up now. Also, I said, remember, this line is pinned for the entire day. So as things move away from it, it'll come back to it. That's the way it is, right? And first, so there are two patterns to look at here. When you're looking at multi-time frame, one is called multi-time frame compressing to the same singularity. Singularity compression is the key. All right, it happened here, you got a blast. So there's no reason for you to trade every day. It happened here, but not with all of it, right? But it happened. where 4 time frames compressed. Now when we went long on 29th or 30th somewhere, I have to look at my account, we got out here, right? Right here. And the open, we just got out of it. A couple of things we went, which was like this price itself obviously was compressing and it was looking for a pullback, right? So now, but the actual, if you look at this cycles, right, this one gave us, okay, got a good momentum and then it just collapsed, right? Now this cycle has to complete. See, right now we are looking at a compression across, this is NYSE, 2500 shares. When they all expand and they all contract, this is where the turn is impacting your SPX. So, and I also know that there are 2500 stocks. That's why I see the value on the right side, 2500 values, right? So when they all expand at that higher level, they all expand and start going sideways on the, these lowest 25 plus 25 minus 25 levels, then I know the cycle is going to shift. It may shift for a day, overnight, a few days. And for that, we have other supporting structures in place. But you got the idea that you don't want to be, when you're not profitable initially, you're not winning 90% per month of your trades, then we have a challenge that you need to slow down, not trade 10 times a day, but go 10 times a month. And this is one approach to doing that. So I'm just giving you some ideas. Now, so this cycle is now complete, right? Right here at our level. So what happened in this guy? Why did we go long here? Yesterday again on IWM. As I said, these cycles need to finish its expansion at the extremes. This is not extreme, this is right in the middle. It's a balance point. So when things are in the balance point, we can go up or down both ways. So then what do? Which direction are you going to pick? So I said it may take 2-3 days for cycles to shift on one side or second side, one side, second side, right? That's why it's not a daily thing. So that is not, this is what is the design of the cyclic tools, right? So right now when you're in the middle of it, what do? We need something else to tell you which direction are you going to go, right? It should have gone down right here, all the way down here, but we chose to go long. Why is that? You should know exactly your bias you're taking and why are you taking it, so you can build some statistical evidence around it, right? Now comes this one I told you about. When the cycles go away from this yellow line I told you about, right, it will pull back towards it. So what happened here? All the 4 cycles, they are like 1, 2, 3, 4 cycles here. You can't see them. They all pulled away from this guy. We're looking for a snapback. Plus, the cycles are not complete yet on the top side. So, the high probability trade was to take the risk on the long side. And using an option, you spend X, you double your money next day. You're up 50%, 70%, right? Options allow you to sleep at ease. I cannot have 100 contracts in my futures and sleep without hedging, right? So option has embedded hedges. You can have a lot of creative deep in the money. You can do puts. You can do 20 creative things, tactical trading with options, or simply start with buying one call and one put, and spend $100, $50 overnight, and see how you are able to structure your mind towards great success. That's all there is. And then rest is all scalability. All right, so this is where everything lined up. So there was one approach to making these trades. Long side on this one, which worked out nicely. For a few days we held it, and then we went long again. After we took the profit here, we went again long again and took the profit in the morning, right here, right. So there we go. So you're looking at this pressure. Now this is where the fat line is telling you if you are in profit, stay on. And everything is gone, everything's fully separated. There's 6 separations happening. Now they're converging at the high level, and this is time to exit and probably reverse your position. We shorted Qs here. Anyway, so why are we shorting? What this again, intermarket analysis, we can talk about it a little later, but you got the idea, right? So okay, so now I've spoken about it very clearly, so now let's go back and check it out. Now this was a shorting scenarios. We don't know how things are working out. Now this is not real market on the right side. It's a fake cyclical tool. This is not really telling you much beyond that. It's just for buyers. So my bias is I want to go short, right? And then I look on the left side, what's going on in the market. Now here, where is my evidence to go short? As long as now you can see same thing happening in this, multiple cycles are separated, going flat, I can take a risk. And look at my yellow line, it is pinned at the bottom, other ones are all the top, they will pull back to this. It did, right? 50 points overnight. So you should be able to hold this overnight scenarios. Options are best way of doing it. Okay, so this one worked out nicely. This one worked out nicely. Then we went long again nicely, so it's all working out nicely, perfectly. We went short here. So now all the 4 trades out of 4 are winners, right? Obviously they are losers as well. But now we know we have a model for bias, multiple things converging together to a singularity for compression and blast off. And we have to use the bias for picking the direction for the blast off. I think this one we already discussed. When the cycles were on this side, we started seeing the pressure just before the close, and then everything converged. Right in the last 15-20 minutes, we buy calls, and this was successful. Now let's go to other ones. Let's go back, right? So the decision has to be made when they all tip over on the extremes, not in the middle. In the middle is just a pullbacks. Cycle, this is a pullback. Well, cycle is not complete yet. Here it completed, right? This is all shorts only. It's short bias started from this higher expansion all the time frame and then going sideways. So now this is telling us white line is here, this is here, you can take a potential shot, and you take a shot, and it goes, you take a shot somewhere here, right? And then what happens? Next day it is going sideways, sideways, sideways. We know the cycles are not complete yet. It is going down. It is going to go down for a day or 2, so we hold it. So weekly options are perfect, and it went down. Next day it gives you perfect profit we are expecting. So this is how the multi-day bias can be structured. Okay, so now let's go back. Now again same thing, all the cycles totally separated, totally now going in a sideways action, and then they're merging. So high level bias, white line is on the top on the right side, it's gonna snap back to it, right? And it made it take a day or 2 to give you the long bias. So this is where it is. There we go. And on the right side, sorry, right here, right? So bias is long somewhere. Now how do you go long? Now there we go. Here this one is gonna tell you its pressure is very strongly down. Do not enter, right? This fat line, do not go against the fat line. It's all converged, and there we go. Somewhere here you, now this is our tactical trend line break, this, that, oscillators, whatever you guys feel like using. But we have our own, everything you see is custom build structures, right? Based on massive experience on Wall Street. So there we go, right? So there is your long bias, and then you had to suffer through some little bit of pain, suffering, but you know why this is happening and why the cycle is not complete yet. So after such a down move, up move, sideways consolidation, it could have gone up, we don't know, but the cycles gave us some potential hint that the bias should be on the short side. Take the risk. This is how we are trading. for, and this is how we recommend people to trade when they're starting their journey towards profitable enterprise. Let's go back here. Last one, that you got the idea. There we go. Cycles are completing. Now they are all going flat, and this is where the bias is going to be. White line is here. It's gonna snap back, and it takes a day or two to cover the things right there. Boom. Well, this is how you make 500% return a month, using options structure, not taking too much risk. Idea of 1 point stop loss or 2 tick stop loss to make $1,000 a day is not a valid structure for startup if you're not profitable.